The public account has lost over $200,000 in value in about the last 2 months at this point in time. Year to date, it is up 6 figures since the beginning of the year, though. And I show you that there because I'm sure a lot of people have been kind of feeling some pain the last, I would say, about 2 months at this point in time. But it is a little important to remember where you started the year and maybe where you were a year ago with your portfolio and those sorts of things. I could tell you, I'll take where I'm at today versus where I was a year ago, year and a half ago, things like that, right? Tesla earnings are in less than 24 hours from now. The stock is now down a whopping 43.2% so far this year. The market cap is now around about $450 billion, which is by far the cheapest we have seen in about, let's call it 16 months or so now at this point in time. Absolutely astonishing fall. Now, it is important to remember Tesla stock is actually up 25% from where it was back in January 2023, which is really, really fascinating. I think this stock is actually up given how dramatic the fall has been. I will be live streaming Tesla's full earnings and the conference call tomorrow on Twitch. Join me on Twitch if you want to see that. It is free to join me over there, okay? Fubo stock, looking at it today, the stock went down over 8% at one point today during the trading day, and then it recovered almost completely to finish, let's call it down less than 1%. Strange how that happens, right? You look at a stock like NVIDIA, the stock was down over 10% on the back of no news on Friday. And then today, that stock is up over 4 percentage points. Pretty astonishing. You look at the put to call ratio. The put to call ratio, if we go back about a week ago, was at nearly 1.2, which is insanely high. Anytime the put to call ratio is above 0.9, it is bearish. More than likely, people should be buying calls in the market because the stock market goes up over time. So anytime you get above 0.9, it's bearish. Anytime you go above 1, which means there's more people buying puts than calls. There's more put options being bought than call options being bought. If you go above 1, that's very, very bearish. If you go above 1.1, you're in extreme bear territory. It very rarely happens. You go over 1.1. And we saw us go to almost 1.2 back, around a week ago. Today's April 22nd, right? Which is pretty insane to think that's how bearish the market got. Now, that's going down considerably, and it's going down very, very quickly, which means people are preparing for a much more bullish market here in the short term. Now, you guys know I spoke a couple days ago about why I think the NASDAQ could explode higher. Obviously, the week we're in now at this point in time, right? 4 core subjects I want to speak about in today's video. What I sold. I want to speak about why I sold that. Then we're going to get into Chipotle. Is Chipotle put options, are they going to be easy money this week? Okay, so we'll speak about that. I want to share my thoughts and opinions on that, if there's some easy money to be made out there. Third thing we'll get into is Tesla. We'll talk about, does it make sense to buy the dip? It's a complete falling knife stock, obviously, right? It's a definition of a falling knife. Do you buy it now? Do you wait on it? Is the $60 to $80 that the bears have been talking about, is that finally coming, right? And then last thing we're going to speak about here today is the one thing that scares me in this market, okay? Appreciate you guys joining me as always. All asking in return for this beast of a video, which I've been preparing this for like the last 4 hours. In terms of all the slides I have for you guys today, all I ask in return, smash a like, make sure you're subscribed here to the channel. If you're looking to apply to join my private group and get access to all my best course curriculums, access 6- and 7-figure Discord chat, get your Steel membership card in the mail. This is the 2023 edition. We got the 2024s. I just don't have one in this room. And then if you're looking to, let's just call it get to a much higher level, there'll be a pinned comment down there to apply to join us in there, okay? Alrighty, so what did I sell? Why did I sell it? Then we'll get to Chipotle, Tesla, and all the other subjects. So I went ahead at the end of last week and I cashed out of my SQQQ call options. Now, SQQQ is essentially a 3x leveraged index against the NASDAQ. So it's something you want to potentially purchase if you're looking to hedge, which I like to hedge my portfolios, or if you think the market's going to go down considerably in a short amount of time. So these particular call options expire September 20th, 2024. Now, I had made, obviously, a pretty extreme amount of money in a very short amount of time. And so this is almost like a leverage play on a leverage play, right? Because SQQQ's 3x leverage against the NASDAQ. Now, when you go buy options on it, you're basically going to the extreme side. So all it takes is the NASDAQ to go down a few percent And these options obviously go to the moon. Now, if the NASDAQ just goes up and up and up, you're going to have these options expire worthless, right? Which is why if I ever do something like this, it has to be a smaller amount of money. But I made $800 in a very short amount of time on this particular hedge, made nearly 50% in a very short amount of time. And at the end of the day, I look at an opportunity like this, and when I go to hedge, I'm always planning to lose all the money. No different than if I buy car insurance, health insurance, homeowners insurance. I'm planning on that's just money thrown away just in case things get rough. Well, sure enough, all of a sudden the NASDAQ got rough, and any hedges I had for SQQQ paid off very, very well, right? Now, for the NASDAQ to push down much further in the short term, you need some situations to happen. I'm not so convinced these situations are going to happen here in the short term. You would need Meta, Nvidia, Google, Microsoft. You need these sorts of companies to miss their earnings. I'm not so convinced these companies are going to miss their earnings. They're all reporting earnings. Most of them are reporting earnings this week, but then you get more earnings from the big dogs coming out next week and over the following couple of weeks there, right? I'm not convinced these companies are going to miss their earnings. The only thing there's two companies I'm a little concerned about might miss. Tesla, which we already know is a falling knife as it is, and the other company that I'm concerned that might miss that's a big dog is Apple. But the one thing I'll say about Apple is they always come through somehow, and it's a miracle. I don't know how they do it, but they usually come through. So I'm not convinced these companies are going to miss their earnings. You need those companies to report bad guidance that comes in below Wall Street estimates. I'm not so sure that's going to happen either, just to be honest with you guys. So both those I'm not very convinced are going to happen. The third thing you need to really get this NASDAQ let's call it much further down in the short term is you need a black swan event. I don't like counting on a black swan event to happen, right? And so I think it's hard to get the NASDAQ down considerably from here. And if we're talking about a little bit down more, so let's call it a 2-3% down more for the NASDAQ, the problem is you run into time decay on options like this, right? They expire September 2024, so it's not like that's that long away, right? At least for somebody like myself, that's super short term. So time decay could eat up your gains. Let's say the NASDAQ goes up this week, then it falls back a little bit next week on the back of, Apple earnings or something like that. You're still dealing with time decay there. So even if the NASDAQ was to go lower, you could potentially lose out on some gains because of time decay. So that's why I went ahead and made that move overall. I do still own some SQQQ straight up in the Patreon portfolio. That's my hedge position there. And then I have other hedges on as well, right? So that's just some food for thought there. It's not like I'm totally de-hedging, saying like, the market only goes up from here. But, if I get a chance to make 50% very quickly on something, I'm not going to get too greedy with it. And I will take some profits there, right? Especially when it's not something that's a long-term play, right? Now, let's get into if Chipotle put options are an easy money maker this week, and then we'll talk about Tesla, and we'll talk about one thing that scares me in this market. So Chipotle, we're looking at 1000xstocks.com here. 53 forward PE. We're looking at trailing 12-month PE on the stock of nearly 65, which is incredibly high, right? This means that you have to be very convinced that Chipotle is going to come in with just unbelievable earnings. They got unbelievable growth to justify this sort of valuation on this particular stock, right? Now, one of the things I like about 1000xstocks.com is the comparison feature, because I want to compare Chipotle against their other big competitors, right? Their big competitors are McDonald's and Starbucks. Now, if you look at McDonald's and Starbucks, right, man, do they trade at very different valuations than, let's say, Chipotle overall, right? So Chipotle is priced to perfection here. 53 forward P versus McDonald's at a 22 versus Buc-ee's at a 20. Trailing 12-month PE is a night and day difference. Basically, the trailing 12-month PE for Chipotle is about 3x what it is for McDonald's in Starbucks. That's insane. PEG ratio, obviously way high on Chipotle. And so when I look at it overall and I'm comparing them versus some peers here, they're priced to perfection. And this could lead to big problems for Chipotle, because if they do not come in and destroy their earnings that they report on Thursday, the stock's going to get crushed like a souffle when you're priced to perfection, right? And it's a restaurant company. It's not like it's a game-changing tech company that is impossible to compete with. This isn't Nvidia. This isn't Palantir. This isn't a Tesla. This is a restaurant chain. Okay, let's not forget that. Now, if we compare them against other high growth companies, so let's say we don't want to compare them against their peers of McDonald's and Starbucks that you're going to see on other corners throughout the United States and international. Let's compare them to other growth stocks like Nvidia and Meta. Shocking. The forward P on Chipotle is significantly higher than Nvidia and Meta, which are companies that obviously have way bigger, better growth than Chipotle. So that's crazy to think that Chipotle is trading at a far higher valuation than companies that have way more growth and are way harder to disrupt. I'll just be quite honest. Try to disrupt NVIDIA's business model and good luck with that. Try to disrupt Meta and try to create an Instagram, a Facebook that has 1 billion plus users. Good luck with that. You just can't do that, okay? Chipotle is definitely difficult to replicate as well, but if we're going to compare who's more difficult to compare to replicate, it's Nvidia and Meta versus Chipotle all day, right? And on top of that, you obviously have the growth rates that are significantly above where Chipotle is at for Nvidia and Meta there, right? Now, if we look here, right, this is Chipotle's expected growth for this quarter we're in and next quarters as well. So Chipotle is expected to grow about 11% for this current quarter and 12%. So 10%, we'll call it 11% EPS, and about 12.5% for revenue. I think those are doable for this current quarter. So I don't think trying to beat this current quarter is the problem. If that's a problem, then Chipotle stock's done. I don't think that's the problem. Where the problem comes in with Chipotle is for the remainder of the year, okay? So for the following quarter, which is what everybody's going to be focused on, analysts are at 18.5% EPS growth. That could be a problem, and I'll explain why in just a moment. And then for the September quarter, 21% earnings per share growth. If you look at revenue here, 14.3% revenue growth expected, and then next quarter, 14.5%. The following quarter after that, right? Now, keep in mind, because Chipotle is trading at such insanely high valuations, right? By the way, 1000xstocks.com, we are now 200 plus on the wait list. If you want to join the wait list before that wait list is like insane, go to 1000xstocks.com and you can apply, join the wait list on there, okay? But when you're trading at this sort of valuation, the issue is you've got to not just come in with these numbers, you've got to exceed them and you've got to kind of blow them away. So let's say there's a situation where the company comes in, they report really good, for this past quarter. The problem is they really need to take numbers up when you're trading at this sort of valuation. If you come under that or even at that, analysts aren't going to like that. Wall Street's not going to like that. They're going to say that's a sign that your growth is decelerating. You have problems coming in your business model. And for Chipotle, just to be quite frank, they got a lot of problems coming. And these are going to be very difficult problems to deal with, okay? So if you look at Chipotle, they've got about 3,400 locations. So Chipotle is always opening up more locations, but the problem is the number of Chipotles open is starting to get so large at this point in time, so it's starting to matter less and less when they open a new location, right? It just, if you open a new location here in Vegas, okay, it's one location out of 3,400 locations, right? Now, the other issue is if the more locations you open, the more you can steal sales from other locations, right? So that's just a little food for thought in regards to that. Why can't Chipotle just have, instead of 3,400 locations, why can't they have 34,000 locations? Well, they have 34,000 locations. Those locations are going to be so close together, they're going to steal sales from each other, and it's going to be a bad situation, right? Why can't Starbucks just double their store count? Obviously, it's completely unrealistic because, if you're going to, it's just insane to even think about Starbucks doubling their location count. Well, then because Starbucks is going to be stealing sales from other Starbucks, right? That's not going to be ideal. No, they have bigger issues here. California minimum wage, this is a little confusing. They say California minimum wage effective January 1st, 2024 is $16 an hour for all employers. Fast food restaurant employers effective April 1st, 2024 are going to have a higher minimum wage. So I thought they were going to like 16 or 18, but it looks like they're going to $20 an hour in California. Starting April 1st, 2024, all fast food restaurant employees, which would be fit Chipotle, right, who are covered by the new law must be paid at least $20 an hour. So the person that takes your order at Chipotle or runs the register or is cooking the chicken back there is going to make at least $20 an hour, okay? At least, minimum. And I was looking at all, their openings for just basic crew member position, which is basic level, right? And they all say pay range $20 to $21.50 an hour. $20 to $21.50 an hour, right? So remember those EPS growth estimates. Well, the cost of doing business is going up immensely. Now, you say, okay, Chipotle's offsetting that because they keep going up on price on their customers. True. The issue with keep going up on price with your customers is eventually people say it's not worth it. It's a ripoff, right? And even if 3% of your customers or 5% say it's a ripoff, for Chipotle, that's massive difference in same-store sales, right? And then those customers go elsewhere, right? So that's just a little food for thought in regards to that, and that could hurt EPS growth estimates considerably. And when it comes to Chipotle, their biggest market by far is, guess where? California, where minimum wage is now $20 an hour. So this is going to hurt the company likely significantly, right? If you look at like Texas, for instance, Texas has minimum wage of $7.25. And so Chipotle doesn't even have their wage they're going to pay in Texas. When I was going through, crew member positions in Texas, they don't even have it listed on there because I don't know if they want to pay you $10, they could, or $12 or $14 or whatever, right? It's a whole different ballgame. Now, the other issue is they got a ton of locations in New York City as well, right? In New York City, also just raised their minimum wage. Their minimum wage started January 1st. So this took effect in the current quarter that Chipotle is about to report. The California numbers will really be reflected in next quarter's numbers, okay? And the California one's a much bigger deal in New York City, by the way. But New York City, they just raised minimum wage to $16 an hour. So now Chipotle is going to have to pay even the most entry-level person minimum of $16 an hour. And don't be surprised if some of those folks are getting $18, $19, $20 an hour, right? And there's a lot of costs that goes along with being an employee outside of just your wage, right? Healthcare is huge, and we know healthcare's expense has gone up. Now, there's a big change that happened in Chipotle a number of years ago. Back in like 2018, this gentleman came in to lead the company, and he's been phenomenal in terms of generating profitability for Chipotle. He's made huge strides with Chipotle's margins and profitability. And the reason he's been able to do that is a man comes over. He used to be the CEO of Taco Bell. Taco Bell, it's all about cost, price, margins, right? Very different than a Chipotle, which was always kind of known for quality of their food. So this man's come in, and I think he's made Chipotle a far worse customer experience. And it's interesting because I thought it was only me. I'm like, I've been a Chipotle, we can call it customer for, first time I had Chipotle was probably 2009, maybe 2010. And the product quality back in the day was so far superior versus what it is today, in my opinion, right? And I thought maybe it was just me. Maybe just I changed and just, Chipotle wasn't the craveable thing I used to have. But then today, I got this Barstools, I think it was Barstool something, this guy kind of making jokes and talking about how Chipotle's been obviously it's not what it used to be 6, 7, 8, 10 years ago, right? And it was interesting because I was looking at the comments, I was like, do other people agree with this? And sure enough, like all the comments were insanely negative in regards to Chipotle. Chipotle is a new Subway. Did Chipotle Quiznos themselves? Pickup orders are always wrong. Dirty tables, overflowing garbage cans, messy drink station, cold food. And these comments got ridiculous amounts of likes. Has anyone ever walked into a Chipotle and seen a clean table? It's absurd. Maximize profits over quality. The pickup and delivery expansion absolutely destroyed the quality of the in-store experience, right? Now, the issue is when quality starts going down, right, it's not something that's reflected immediately in the numbers, but as the years tick on, it could be seen more and more and more, right? And I think that's what's starting to play out now, where people are like, it used to be a great place to go. It used to be craveable. You used to want to go there again and again and again. And things have just changed dramatically as time's gone on, right? So this is just some food for thought, no pun intended, in regards to this whole Chipotle situation and kind of how people are starting to feel about the brand and the restaurant. And I mean, even the employees of a lot of these locations. I go, back in the day, you went into Chipotle 2014, you had it was a different breed in there, man. These guys were ready to go. They were with it. They were on it. They looked excited to work. It was incredible. You go into Chipotle today, what's amazing is I cannot tell the difference now between a Chipotle employee and a Taco Bell employee. And I can tell you guys, it was not like that 10 years ago. There was a clear difference between somebody that worked at Chipotle versus somebody that worked at Taco Bell or Del Taco. It was a big difference. I can't distinguish it apart. I walk in, last time I went to Chipotle, it was like a month ago here at a Vegas location. It was like, I don't even know how to explain it. It was like what you would expect from Taco Bell in terms of like the employees, the interaction, the no personality, the looking like they're depressed to be there, the movement of the employees, like walking around so lethargically, like they're half asleep. It's so night and day different than where Chipotle was 10 years ago. I wish I could take you back to that time. If you experience it, you know what I'm talking about, man. But I'm like, I wish I could take people back 10 years ago to what Chipotle was back then, food quality-wise, employee-wise, versus what it is today. It's a night and day difference. And all this stuff will matter. It will matter, right? Now, in regards to Chipotle, there could be one last blow off top here in the stock before the crash happens. And that's a risk in regards to this Chipotle situation, right? There's a stock split coming. The stock split's coming. Supposed to happen in June. Okay, this big stock split. So, this means nothing for the company, but it's one of those events that people get all hyped out about. They buy call options for. They think it's going to make the stock go up. And sometimes it becomes a self-fulfilling prophecy of everybody thinking the stock's going to go up. So they all buy the stock prior to that happening, and it makes the stock go up, right? So there's just a little something here, but I don't know if we're going to have that sort of FOMO situation in this because Chipotle is such an expensive stock. It's nearly $3,000 a share, right? And so maybe there is this last kind of hurrah, blow off top situation in regards to stock, or maybe it never really actually transpires because the stock price is so expensive, right? So I don't know. Like I said, it means nothing for the company, but it means something for the stock price, okay? So that's a risk in regards to Chipotle situation, right? It feels like a house of cards coming crumbling down here, but to get the timing exactly right is going to be difficult. So in regards to playing it for this earnings, the issue is you got still the stock split to mess with, right? And then you still have, what if the management guides for a higher number and they still don't hit that number next quarter, right? But they guide for that number, then maybe that's an issue, right? But if I was to try to play this for an earnings move down, I'd be looking at something like $2,900 strikes or maybe $2,500 strikes or maybe a combo. Because I'd want to kind of see either an epic crash or a small fall, in the stock where it like goes down, but it's down like 4 or 6%, something like that, right? Which your 2,900 strikes might save some face there since they're technically in the money right now on those puts, right? Or it's going to be an epic crash and the EPS is a mess, the guidance comes in really weak, and people realize this isn't the growth story that everybody thinks it is right now, right? And when you're trading on high valuation, you can get a 15, 20% down move very, very quickly, right? So that's kind of what I would think in regards to that. As far as me personally, I already have longer term put options on Chipotle that expire January 2025. But in terms of earnings, I don't know if I'm going to play anything. If the stock runs into earnings, maybe. But like I said, in regards to anything like this, it's small money. It's small money. I'm not going to risk a farm on this because at the end of the day, a cult stock like this, if it wants to stay a cult stock in the short term and everybody wants to play it for the stock split that's coming in a few months, actually in a couple months, maybe they do it. Now, third thing up here, let's talk Tesla. Let's talk about $60, $80 coming. Let's talk about if it makes sense to buy. So first off, I saw this today on X, an interesting post. November last year, Elon Musk told Disney CEO to go, you know what. Since then, Tesla shares are down 40%. Disney shares are up 20%. Disney has outperformed Tesla by 60% since that day. I just thought that was interesting. This, I think, is meaningful and matters. Cheapest brands to maintain long term. Tesla cost of ownership, and this is out of Consumer Reports. I mean, Tesla blows away the competition. It's not even remotely close, right? Compared to the cost of ownership of these other brands versus Tesla. Eventually, all these price cuts will matter. Eventually, the fact that cost of ownership is so low for Teslas, it will matter. This matters over the long term. The price of your vehicles, the quality of your vehicles, what you get for that vehicle, and the cost of ownership, all this stuff ends up mattering over time. In the short term, it can get messed up, but over the long term, I promise you, all this stuff will end up mattering. It will all end up mattering significantly, okay? So once again, this is out of Consumer Reports. This isn't like some data that Tesla threw together there. And you can pause the video if you want and see where your car brand is, versus Tesla. And it's a night and day difference, right? Now, in regards to Tesla, it's interesting because they did that $2,000 price drop, which was way bigger than just a $2,000 price drop. It was the signaling of like prices might not have bottomed yet, margins might not have bottomed yet, right? Elon still being willing to take price down. So I thought the signaling was much more impactful than actually just the price lowering, right? But it's interesting because the stock only went down 3% some change today, which makes me think the mud might stop sticking to Tesla, right? And the mud, once you get so much mud on something, it just starts to fall off. And I feel like in regards to Tesla, based upon today's weak price action in terms of stock only went down 3% after that big signaling, I thought, you would have thought maybe that stock would be down 6, 7, 8, 9, 10% today. 3.4%, not much there. So it seems to me like the mud's stopping sticking in this situation, right? Now, the stock is a definition of a falling knife. It just is, right? And the stock's down over 43%. You guys know I love to buy falling knife stocks, especially when it's a company I love that for the long term. I'll gladly stick in there and I get my hands sliced and it's not fun. But as long as I'm right about the long-term trajectory of that company over the next 3, 5, 7 years, it pays off handsomely to get my hands sliced in the short term. But there's a lot of people out there saying, you know what, I'm going to buy the stock when it's clear, it's bottoming out, it's forming a bottoming formation. Right now, it's just a falling knife. There's no clear bottom in. Well, first I'll push back on that. This could have looked like a bottoming out there, and it wasn't. This could have looked like, the stock's bottoming out, we're about to head up. It wasn't. So I'll throw some cold water on that. Also, Tesla doesn't really form clear bottoms. The stock is all horrible one day, and then the next day, it's the greatest stock ever, right? This shows you January 2023 through the next 7 months, the stock gained 142 percentage points. And there was never a clear bottom. It went from a complete falling knife, no one wants to touch it, to everybody wants to own it. And it happened in months. If you look here, okay, I'm showing you, back in that time frame, I'm showing you now September 2022 through January 2023. The stock was a complete falling knife. It fell over 50 percentage points during that little 4-month span there, right? And this is all while most of the Mag 7s bottomed out somewhere in here roughly, right? And Tesla, it didn't matter. Like Tesla was like, okay, all the other stocks are bottoming. We're just going down and down and down. So Tesla runs its own race. It does its own thing. Market's going up, down. It's going to run its own race. If other Mag 7s are doing whatever, it doesn't matter. Tesla's going to do what it wants to do, right? And so the stock was cut in half in that amount of time. And there was no clear bottom. And then the stock went up 142% the next 7 months, right? Next thing I'll say is, be careful betting against Elon when the chips are down. People do this time and time again. They bet against Elon when the chips are down, and then they very quickly learn to not bet against Elon when the chips are down. So I've seen it time and time again. Maybe this is a time they could finally slay this dragon, and they can finally beat Elon. But when the chips are down, don't bet against the guy. That's all I'm saying about that, okay? Now, $60, $80. All these people talking about, I'm going to buy the stock when it goes to 60, 80, whatever, right? First off, if you really believe the stock's going to $60, $80, buy some flip and flapjack and put options. Put your money where your mouth is. If you really believe that. People don't really believe that. That's why they won't put their money where their mouth is, right? Now, also, the other thing I'll say about this is people have been predicting $50, $60, $80. They've been predicting that since the stock was sub $125 in late 2022, early 2023. They've been predicting it for a while. And we're still waiting. But the issue with Tesla is everybody wants it at $60 to $80. Who wouldn't want Tesla at $60? Who wouldn't want it at $70, $80? Almost every freaking body wants it at that price. And if almost everybody wants it at that price, right? It's nearly impossible to get at that price. It's no different than saying, I want a mansion in LA for $1 million. Sure. Everybody wants a mansion in LA. Well, maybe you don't want to live in LA, but I'm just using it as an example. Let's say LA didn't have the issues it had, okay? So, mansion in LA. $1 million. Everybody would gladly take that if LA had their stuff together, right? That's why it would never happen. So everybody wants Tesla for $60. I want it at $60. You want it at $60. Wall Street wants it at $60. We all want it at $60. That'd be great. That's exactly why it won't happen, okay? Because the problem is a lot of people are willing to pay 80 and they're going to bid it up at 80. And if that even ever happened, right? Or 100, or 120, or 140, right? And so that's why these situations never happen. Everybody wants the stock at a certain price and it never actually hits that price because guess what? Everybody wants it at that price, right? Now, I played put options on Tesla earlier in the year, made really good returns on that. Made $6,478 in a pretty short amount of time, and I got out of those. And I'm still happy I got out of those, by the way, because I got out of those when the stock was getting destroyed at that particular time, and the stock's lower today, but based upon time decay, since I got out of those versus where I'm at now, I'm not even sure those would have appreciated that much. So I'm happy I moved on. And whenever you're hedging against something, which that was a hedge, against my long position, when you make a lot of money in a very short amount of time on a hedge, you gotta take the profit and get out of that baby, man. You gotta move on. Long-term investments are totally different, right? Long-term investments, you gotta let those great companies run over 3, 5, 7, 10 years. But when it comes to a hedge, when you make a bunch of money quick, you take that money and you run. You don't be greedy when it comes to hedges. When it comes to long-term investments, you be as greedy as possible. When it comes to hedges in a portfolio, take the money and freaking run when you get it, man. That's the bottom line with that, right? Now, so Tesla, at the end of the day, if you're a long-term investor, it makes sense to buy the dip. And if it goes lower, you can continue to buy the dip, right? Now, last thing up here, the one thing that scares me in this market, let's talk about that. The one thing that scares me is oil. If you look at oil, we're up, roughly 15% so far year to date. And whenever you get a big spike in oil price in the summertime, it could lead to actually a recession. Now, the good news is recently oil has started to chill down. So if the Middle East doesn't get too crazy here over summer, then this might not be an issue for us, which would be great because that wouldn't be an issue for the consumer, which would also be great because it wouldn't be an issue for inflation, which then could potentially lead us to lowering of interest rates, right? Which is obviously weighing on the whole system right now. So this is scary, but the most recent activity is somewhat welcoming, but don't get too confident yet, okay? If we're still in the 80s come June, we're looking good. If we're still in the 80s come June, we're looking good, okay? That's what we need to hope for, but it's something we should all keep an eye on here, folks, okay? Hope you enjoyed today's video. I appreciate everybody joining me. As always, if you're looking to apply, join my private group this week, get access to the 6 and 7 figure Discord chat, access to see the moves I'm making in my nearly $2 million Fidelity account, the public account there, access to all my best course curriculum so you can learn everything I got up here. Then fill out the pinned comment down there. We got an application there, and we see if we can get you in there probably later on this week or maybe next week, okay? All right, guys, much love as always. Appreciate you joining me, and have a great day.